Let's get more on Tesla's numbers with Deepwater Asset Management's Gene Munster. Gene, good to have you with us. You think another model will be announced?
I do, Melissa. I actually think there'll be three models. That cheaper model that we're just talking about, I think that they'll have a robo van, we'll call that, something that's way off, and then, of course, the robotaxi. So I'm going to this thinking we'll have three models. I do agree with Phil that next week is going to probably be light on details. If you just look at the setup of the event, the number of people that will be there, this is not analysts and investors with their laptops. This is essentially a launch party. And so you can imagine Elon getting up there, talking in kind of very high level and not giving much substance around details. The one detail that I'm going to be hyper focused on is that cheaper $25,000 car when they expect to ramp production. And I just want to kind of put one thread through why this is important for next year, is that the street's looking for growth to go from essentially 7% in the most recent quarter to 12% next year. To get to that 12%, you essentially need to have that cheaper model starting a ramp in the middle of the year. If you look at historically, the gap between when they announce a vehicle to when it actually becomes available would suggest it's going to be late in 25 or early 26. And so we could be shaping up for a little bit of an air pocket, still believe we're going to get back to growth, but I think investors should have their kind of their eyes clearly on the timing of this new vehicle because it's going to impact delivery growth next year.
So the 12% growth number you're talking about is 12% in deliveries or 12% in revenue? Because I would imagine the more models you're launching and trying to ramp, the thinner the margins will be. And that could be an issue.
Yeah, 12% was in terms of deliveries, and I think the street's starting to factor in some of that cheaper model.
All right. So it's baked into revenues, it's baked into profits, it's baked into margins.
And yeah, and you could see if that timing gets slipped. I'm a big believer in Tesla. I think that deliveries growth will ramp into the 20%, but I just think people should have a level head in terms of what 25 looks like.
Gene, it's Tim. So again, around gross margins, 14.6 is a number I see being talked about. What do they have to do to get the street excited that you're not seeing this erosion? And is there any expectation that that could be a surprise?
We're still in the transition period. I think this is an important quarter, the September quarter, because we finally returned to growth after 6 months of declining deliveries. So that's an important part. And I think that lays the groundwork for us to have some improving margins. But as long as they kind of stay stable, I think it will give investors, of course, Tesla investors are notorious for having a long-term view. And if they can keep that stable right around that 14, 15%, and keep some optimism around these products coming out mid to late next year, I think that that's enough. If that margin declines, then, of course, it's going to be a whole different conversation around the stock.